heard that big deal happening on Castrol, but let's shift focus back to Gulf Oil Lubricant. We have Mr. Ravi Chawla, the MD and CEO of the company, joining us on the show. Mr. Chawla, hi, morning. Thanks so much for your time. First of all, congratulations on the new launch that you've announced to the street yesterday. But let's rewind slightly back to our previous conversation, because last time when we interacted with you, you did tell us that the second half was expected to be stronger than the first half, led by festive demand, GST cuts, and rural recovery. Tell us if that has actually panned out so far. How has quarter three been for you?
Yeah, we've seen continued demand, which is good, and we've been growing double digit for H1. So I think that is intact. We of course had a very good agri season in the second quarter, July, August, September, which is a monsoon quarter. So that helped us a lot. As we see quarter three and quarter four, of course, the agri season is not expected to be still continue to grow for us. So I think we will continue our 2 to 3 times the market growth rate, which is expected to is tracking at about 3.5%. So I think that continues and that momentum will continue in the second half.
All right, look forward to that. Mr. Chawla, hi, morning. This is Shrishti also joining in. Given how Q3 has panned out, are you still confident of that 10 to 15% volume growth going forward as well?
Well, we've been doing 2x the market, to say a little more than 2x. The market grows 3.5%. So our growth is generally in that 9-10%. And of course, that will continue. So I think that is where we are. And our core volumes continue to grow at that pace, which is at least twice the market. So we would expect that double-digit growth, which is around 10% so far, to be around that level. And the quarter four, obviously, there'll be no agri season. So we'll have to watch the fourth quarter, how it is going. And hopefully that will continue in that 9-10% range in terms of volume.
Okay, and Mr. Chawla, you did mention that this growth is going to be at least double of what the industry is doing right now. Help us understand what is making you so confident about achieving such a high figure, and is it because of the personal mobility segment?
Well, our all-round strategy has been to look at segments, both B2C, B2B. And I think we've been working on those segments, working quite hard in terms of our strategies. So both our B2C and B2B, we have a lot of OEMs, we have our distribution business, we have industrial infrastructure. So I think our strategy has been to focus in segments, and we've been able to get the 2x growth consistently for over a decade now. And still we have a lot of segments which we don't have more than 5% market share, though in some segments we are close to double digit. So I think our strategy has been to multiply our market share ahead of market growth. And I think that is where we've been quite consistent in our performance, and we continue to be confident that we will continue gaining market share ahead of the market.
All right, Mr. Chawla, we understand that you have also launched new variants of Gulf Sintrac, a range of fully synthetic high-performance engine oils for premium and high-end motorcycles. How big and crucial is this launch for you? And is it a part of your Unlock 2.0 strategy? What it is aimed at?
Well, we have a brand, Gulf Pride, which is in the mass market of the motorcycle segment. And as we have seen the premium segments, 150cc, along with the various benefits the government is offering also on GST cuts, this is a segment where we have a lower market share. So this entire range of Sintrac is going to cater to all the motorcycles above 150cc, which are there in the market. So that appears very well for us to step up the value in terms of our offerings. And it is in line with Unlock 2.0, as you said, which is to accelerate, premiumize, and transform. So it's in line with that Sintrac will offer this. And we also have had promotions with the India Bike Week, which just concluded a few weeks ago in Mahabaleshwar. Earlier it was in Goa. So these are big events where the adventure bikers come. So I think this segment for us is a segment which we are aiming to definitely take our market share up in terms of the future, and is also a growing segment, as you know, in terms of adventure biking and performance biking.
Okay, so that sounds good. Let's also talk about your EV charger subsidiary, the Tyrex arm, that has reported solid revenue growth of 75% in the first half. Help us understand, is that growth sustainable in the second half as well?
Well, yes, in fact, the second half should be a good second half, because a lot of the infrastructure projects and the buses that come with EV charging can take place. So the second half is usually a better half. Of course, last year's second half also has been skewed to that direction. So we see the growth continuing, and we have done 75 crores in H1, 70% growth, 70% growth. Sorry. So I think we will be able to cross the 100 crore mark annually for the Tyrex business.
Mr. Chawla, we do understand that your company is cash rich. If you can help us have a number that how is your cash balance looking like right now, and what are the plans to utilize that? Will you be planning to utilize the funds to expand your ecosystem, or EV ecosystem to be precise, or any other areas where you want this money to work?
Well, definitely, we would like to reward the shareholders. We continue doing that, and in addition to that, as you rightly said, we have made investments in mobility over the last from 21 onwards. We put in money in three mobility areas. Indra is a UK-based charger company, which we have AC chargers. We have a software company, Electrify, and 2023 we invested in Tyrex. So we are continuing to look at opportunities in the mobility space, and we would like to make investments where we don't want to have a very high cash burn. In fact, we want to invest and then grow and also have a good return. In addition to that, we are looking at some adjacencies in our value products, higher end value products like industrial and some of the other segments. So I guess the board is considering a lot of these options, and once we are ready with that, obviously we'll come back to you. But yes, the strategy is to look at some investments which can add value and also continue our growth and our market shares both in the core lubricants and the mobility space.
Okay, and Mr. Chawla, a couple of questions now for you. Given that most of your base oils are sourced from overseas, what has been the impact of the rupee depreciation versus dollar on your margins? And to protect the same, are you taking any price hikes? And do you still see the margin between the 12 to 14% guidance?
Yeah, so we're going to definitely try to be in that 12 to 14. It has dipped slightly because we saw the exchange rate of about a 6% depreciation on rupee versus the dollar this last few months in this financial year. And I think that is where the margin we have already announced some price increases in the B2C. B2B, we have a price variation clause which will get effective next quarter. So it takes a couple of months, but yes, there has been a minor sort of, I would say, challenge in terms of the margins, but we are again premiumizing, and the long-term outlook is still to keep the 12 to 14. And probably when we look at the long term in terms of looking at the next financial year, we want to try to increase the band of margin. Hopefully, the exchange rate will be stable, and crude has also been soft, so that helps. We also do a lot of local sourcing, so local base oil also capacity is going up, so we will have the option of doing that also. But I think the prices are more or less similar, but exchange rate does need to be watched, and we obviously looking at that very closely to manage our margins better.
All right, Mr. Chawla, we look forward to that. But with this, we let you go. So good having you on the channel today. Thank you so much for your time and looking forward to more.
Thank you.